Hello and welcome to the Southern Institute of Technology's academic program, the Certificate in Small Business Management. Today we're going to be concentrating on one area of business, export.
My role here is Business Manager International. I look after the exports to Japan, North America, Middle East and Asia.
Can you tell us how important the export industry is in New Zealand?
Oh, very important. The country our size really relies on being able to manufacture or grow products for export, for foreign revenue to come into our country.
So what are the right reasons for a business to start exporting?
You definitely want to have a very strong domestic base of business, and you want to be thinking about how you would increase or utilise your capacity of production, and how you can utilise or become more competitive by growing your manufacturing base to lower your unit cost. You definitely do not want to be in business just because you have solicited an inquiry from a foreign country, or you think it would be a great way to travel, visit family, or take short-term gains from foreign exchange. It's definitely a long-term position that you take in export.
What are the main benefits for a business to export?
The main benefits would be utilising the capacity of your company, being able to grow. And I guess most manufacturers are all looking for growth. And I think once you've exhausted the domestic market and you have you can utilise your business or the benefits and features of your product and look at that competitiveness offshore.
How can a new business be sure that they're in a secure enough position to start exporting overseas?
You need to do a lot of market investigation, a lot of planning, understanding the market need at the point of sale. So for example, if you're exporting a product to North America, you need to establish exactly how your product fits into that market segment. It's very much like developing your own domestic business. It's just starting a different business process all over. So once you've found your niche or the gap in the market for a domestic product in New Zealand, you would then treat exactly the same in an export position. You need to know the market and understand the market, understand the process of selling, distribution and marketing, and of course leading to the end use or consumer.
So what are some of the best ways of researching offshore markets?
New Zealand Trade and Enterprise is a very good place to start in terms of a market profile. You need to establish contacts through networks of people within the industry you're in, or of course you can go and visit the market directly, but in doing that it's not like you would arrive at the hotel and pick up the yellow pages and start making calls. So it's about a lot of planning back in New Zealand before you leave, and establishing a strong network of contacts and gaining market intelligence.
So initially, where are the best places you could go for advice?
Okay, the kind of people you need to be talking to is definitely your bank. You need to make sure that you've got sufficient and the strength of finance behind you to fund a project that's going to take a minimum of 6 months, but more than likely 12 to 18 months. The amount of capital needed will depend on the size of your business, but maybe $40,000 to $100,000 outlaid up front. So you want to be talking to banks and financial institutions. You should be talking to New Zealand Customs in terms of understanding tariffs, shipping companies for freight options, the process for documentation in getting these containers to market.
Can you tell us a bit more about the taxes and tariffs that you have to be aware of?
New Zealand does have many free trade agreements, but where we don't, there are tariffs, for example, on particular dairy products or sugar or ingredients that some countries will protect imports versus their domestic supply. They will range in percentages from maybe as low as 2 or 3%, but could be as high as 20 or 30%. And that's something that you discuss with New Zealand Customs, or be put in the correct, or talk to the inbound country for understanding what their tariffs are.
And what about the exchange rate? How does that affect the export?
Huge. Foreign exchange, currently, for example, the exchange rates are quite high, or very high, and that certainly impacts on your revenue, converting anything into New Zealand dollars. At the same time, we shouldn't take advantage when the exchange rate's very low. if we go back a few years when the US dollar was just below 40 cents, that made the revenue quite strong, but we shouldn't take advantages of that. In the short term, we've got to look at long term, being in business over the long term, 20, 25, 30 years. So there's a huge impact to your business.
What are some of the common mistakes first-time exporters seem to make?
They're probably not understanding the market. I guess reacting very quickly to a non-qualified inquiry. You definitely need to qualify all those business inquiries that come at you.
How can you be sure that you have the right personnel at the other end to receive your goods?
It takes some time. You want to be understanding the role of that person as an agent or a distributor or an importer. You should be looking for someone who typically has some power in the channel of distribution or getting the product to the end user. They need to have a very strong network. You shouldn't really look for, say, someone who's looking to get into importing for the first time. If you're a first-time exporter, you want to be looking to someone who's well established in importing and then redistributing your products.
How do you deal with some of the cultural and language difficulties?
Something to be very mindful of, even in English-speaking countries. Always do some research. Think of using your best manners, I guess, being polite in Asia. But also even in North America, you should also consider just the differences in colloquialism of language and understanding what is really going on. And always clarify what is meant by a particular term of business or trade.
Are there any more financial considerations that you need to take into account?
Your terms of payment, under the terms of trade, a little different in export versus being a domestic business. Typically, payment methods could be TT or telegraphic transfer, and you'd receive funds prior to the product going on shipment. Or typically there's a lot of business done through letter of credit, where you'd have your banking institution and their banking establishing documentation that would guarantee payment on the correct documents being presented at time of export.
The Seriously Good Chocolate Company was founded by Jane Stanton in the year 2000. The original chocolate recipes were passed down by her grandfather. Today, however, chocolate lovers can enjoy over 54 varieties, ranging from bluff oyster, cinnamon truffles to tequila and limes.
The Seriously Good Chocolate Company started in Te Anau, and the concept started there. We moved to Invercargill and we were in a little wee store, which is about a third of the size of the store you're in now, and it just quietly grew from there. And we moved in here, bought this building, turned it into a cafe manufacturing complex, picked up a couple of contracts around New Zealand that were a little bit big for the store, so we moved the factory off site into the Blue River complex down in South Invercargill. So we have the two operations running now.
Fantastic. Do you stock your chocolates throughout New Zealand?
Yes, we do, from Smith & Co.'s right through. And we have contracts with wineries such as Selene Winery, the Mudhouse, Gibbston Valley, Alan Scott's, Spates, so it's great.
How have you gone about distributing your chocolates to other regions?
Okay, some of it's been word of mouth. Being in Southland people are fantastic in that they take the product out to Southland and then we get phone calls. We've been in different magazines and obviously travelling myself through the country marketing the products, getting them into the main stalls like Smith & Co.'s, Kirkaldy and Staines and Valentine's. That encourages other outlets to work with the chocolates as well.
So do you export internationally?
We're actually starting to export now. We're working with 3 offshore companies. We're a niche market, so it's a little bit different than some of your bigger companies. We've gone to particular groups of people, so because we're not big enough to handle huge volumes, we've gone into specific markets offshore.
How difficult was it to break into foreign markets?
We had a go 3 years ago trying to get into Australia and it really didn't work for us. We weren't ready and we went too soon. So it's all been quite a huge learning curve to get the steps in place to make sure that we're going offshore for the right reasons, not because we haven't sorted our market out in New Zealand, so we had to actually retrench, refocus and make sure that we had ourselves organised in New Zealand and then go offshore to the niche markets. And actually the 3 companies concerned approached us.
How can you tell there's enough room in international markets for your product to enter?
Again, it's because we're a niche product. We specialise in making wine chocolates, and with the likes of Gibston Valley, Cellini, Pinot Ricard, they've been very supportive, so it's got our name out there, and it's been a win-win situation for us all.
So what's the process you go through to get your products overseas?
Okay, because we're so small, we've used an agent overseas, and that's alleviated a lot of the problems for us, such as customs, paperwork, documentation, but we've had to build that into our price. But again, because we're a niche market, our price hasn't been driven by volume, quantity or competitors. This is our product, this is what the value is. If you want to go with our product, then that's what you have to pay.
So how do you know you're meeting the needs of the international market?
Well, we're very young at it at the moment, so we're not certain. We know that we have a very good product. We're very positive at our product. Again, we did analysis and worked out where we fit in the market. Different people in business call it a SWOT analysis, your strengths, weaknesses, etc. And also why we're different to other chocolate companies. And then we realised that we have something a little bit different, something special. And so that's what we've worked on to get into the 3 markets we've got into.
Do you find that different countries have different chocolate preferences?
Yes, even in New Zealand, without going out of the country, for example, espresso chocolates hardly sell a box here in Southland, but it flies out of Auckland. But as the coffee culture's changing, that will change. It's like food and fashion. It changes with time, so you've got to keep ahead of the fashion or up with the fashion of food. And we pride ourselves in doing it. We like and we try to be different, and that's where we think we've got our niche.
So what are some of the regulations you have to be aware of when bringing product into different countries?
There's all sorts of things like tariffs. In some companies there's tariffs on the sugar, there's tariffs on Highlander condensed milk, the dairy products. Again, it depends where you go. What the different tariffs are, so you have to build those into your costings. You also got to remember that within New Zealand we can just turn around and deliver a box down the road. If there's a hassle, we go and fix it. If there's a hassle offshore, you've got to plan that airfare, head offshore. It's the cost involved to repair the mistake or the damage. It's also even for chocolate down to the conditions with the temperatures, etc. And the logistics of getting product across Sydney. So that's why in Sydney you'd need a distributor or an agent. Same with the Asian countries, you've got language difficulties and barriers. So we're very young, we're very small in the export market, and because we have the support of bigger companies, such as Blue River Cheese, they've given us a bit of a buffer to help us quietly get into the market without having too many hiccups. I mean, it's down to even making sure that of payments and things like that. And also we've learnt recently, you've got to watch the trends offshore. Like, why suddenly you might turn around and find Thailand. You get a whole lot of emails from different companies in Thailand wanting your chocolate. So it means that something's happened in the marketplace. So you need to go and find out what's happened and why suddenly people are hitting you up for chocolate. And it could be that, say, in Belgium they put the price right up, so they're looking for a cheaper option. And for a company of our size, that isn't where we want to be.
What have you found to be the most challenging part of the export process?
The packaging and the shipping. And probably making what they want. I mean, it's all very well to make what we want, but they have particular specifications, especially with Japan. Even the difference between Japan and China in their tastes and what they like. And one thing we've struck is everything's made like with wine and different products. It's not with flavourings or anything like that. But sometimes our chocolate isn't as shiny as some of the other chocolates, and yet the Japanese believe that the shiny chocolates are the best. Yet we know with our flavours and our tastes, our product is really good. So we've had to change that. We've had to look at changing some of our packaging to suit the Japanese market. So it's all learning curves. What we think is really great here, our packaging isn't quite up to scratch of the niche market of Japan.
Do you find it's easier to sell in a local market where you're known?
Yes, at this stage. Again, because of our size. We're quite well known throughout New Zealand, but having said that now, some of the expats in Japan know of us, and that's how we're starting to work with these people.
Alliance Group Limited was established in 1948 by a group of farmers to process and sell quality meat and other products to international markets. Today they employ around 5,000 staff across 8 plants nationwide.
Yes, well, the background of Alliance, there was some disgruntled farmers way back in 1948 that decided they want to put a meat company together, which is still a cooperative today. They went to the Royal Commission in 1956 and they were granted a licence, and the plant was constructed about 1959. And since then, right up to the 80s, it was just the Lawnville plant out at called Alliance. And since then we've acquired quite a few different plants, ex-Ocean Beach, Waitaki, International and Ocean Beach. So now we comprise of 7 plants in the South Island and 1 in the north.
How many people does Alliance employ?
Well, it's very seasonal, especially in the deep south because of climate conditions, but we employ about 5,000 people during the peak of the season, and also we have 6,000 farmer shareholders that supply stock to us.
So how many of those people would deal with the export side of the business?
In terms of all the people at the plant obviously are there in terms of the processing side. So in terms of our company, we process 92% of our product, and we're mainly predominantly lamb company to the overseas markets. Beef is about 80-85%, and then we also do obviously venison and bobby calves as well.
So what sort of quantities are you exporting?
The major quantities in terms of lamb, we probably export sort of 100,000 tonne a year. And the numbers in terms of lambs, we kill about 7 million lamb across all our plants, just over 1 million sheep, 140,000 beef, 140,000 venison, and about 100,000 bobby calf units. So it's quite a volume.
Wow, sure is. So what are some of the rules and regulations you have to follow when exporting goods overseas?
Every country is now trying to protect their own domestic market, so we call them OMARs, overseas market access requirements, and very, very difficult sometimes to meet those requirements, but our plants have done very well, and the standards in New Zealand are very good. You have to get EU approval, which is the EU markets, USDA approval, which is to the North American markets. There's labelling requirements, traceability, animal welfare, farm assurance. And then there's quotas within markets and tariffs and duties that you've got to acknowledge. So, and there's a lot of others as well. So it's very demanding to be able to meet overseas market requirements. But New Zealand tends with this nice clean green image, tends to do well in that region. So
how many different countries are you exporting to?
We deal with probably around 50 major countries, but the main countries is the UK for lamb as well. There's Germany, France, Belgium. The North America, both Canada and the States, Saudi Arabia, China, and emerging markets like the Southeast Asia and even Eastern Europe is becoming more of a player in New Zealand products.
Can you talk us through the process the product has to go through to get from here to foreign shores?
Okay, in terms of once we have the orders from the customers, and our business is very much more key account, we're not really so much as a commodity trader. But once we have the orders, in chilled form especially, which is growing, and the product has got to be held at very strict temperature controls, is that once it's unloaded at plants onto temperature controlled containers, delivered to the port, and whatever the closest port, in our case it's usually Port Chalmers, and delivered into the market. So it's shipped, it takes 23, 24 days maybe to the UK, and during that process it's very controlled temperature regime, arrives in the market ready for distribution into generally retail hotel trade. And
can you monitor whereabouts it is?
Yes, you can. In terms of everything's advanced, technology is advancing all the time, so you can actually check at any stage where the product is, making sure the temperature controls are in place, and to make sure that your product still has its integrity when it leaves New Zealand.
So are you still responsible for the product when it leaves New Zealand?
Yes, we are. In terms of our insurance cover, generally it depends on the terms of sale. Sometimes the terms of sale might go to the port, sometimes the terms of sale might take you beyond the port right into the customer's back doorstep. So every sale is different, but we generally take responsibility to the port, then the customer takes responsibility after that.
Do you have any difficulties getting into certain countries?
Yes, you do. There's a lot of certification and documentation requirements, and again, they're all different per country. And sometimes entering some countries more difficult than others, and that they get very strict inspection criteria, and they'll inspect virtually every container when it arrives. So that is always difficult, but in terms of New Zealand, as I say, our image is very good relative to some other countries, so we generally perform reasonably well in that respect.
So is most of your product shipped?
Yes, predominantly the 92% I mentioned was exported, is shipped on container vessels. There's a little product that is air freighted from time to time to meet small orders or late orders into the market.
So is Alliance only based in New Zealand?
No, we have, in terms of some markets, how you deal in some markets, you've got to deal differently. We have an office in the UK because it is quite a large market for us, which has probably up to 14 people. We have 2 people based in Amman, Jordan, and we also have small offices in New York and Canada or Toronto doing the North American business. And so, yes, we have quite a wide market infrastructure, is quite wide. And we deal in 3 major brands. There's Ashley brand, Pure South brand and Alliance brand, which again is some of those have been new to us the last few years as we've developed our brand. As I mentioned before, we really try to drive our key account business. So the brand holds that integrity, and that's the Alliance brand is where we stand behind.
So how many different ports do you ship out of?
Our plants are located usually where a lot of the stock numbers are. So Port Chalmers, I suppose, a lot of the lamb numbers are sort of north of Oamaru, or south of Oamaru, sorry. And so Port Chalmers is certainly one major port we use. We also use Littleton, Napier, Tauranga, and on some odd occasions Auckland with our North Island facility.
Have there been many changes to how exporting is done since the early days?
Oh, there is. There's a lot of new structures within the industry. There's also, we deal a little bit differently. We use mainly importers into places like Europe. Sometimes you have to deal agents in countries where there are language barriers, and sometimes we deal with brokers in markets like the Pacific Islands where the broker takes the financial risk and we get paid as soon as we actually load the product into a container. So there's different ways you actually deal in different markets.
Are there certain trends you have to follow depending on the market you're entering?
We certainly do. Different products are more demanded in some markets than others. Like the North American market is very much a middle-driven market, or lamb French racks for barbecuing and restaurant trade. You've got the UK market as more traditional lamb legs, which is for roasting and making into ready meals. And then you've got the lower valued products which go into places like Papua New Guinea and Fiji and Tonga in terms of lamb flaps for hot pots, casseroles and soups. So every market has its slightly different characteristics, the way they cook, which is always a challenge in terms of us trying to sell the right product to the right person at the right time.
Absolutely. So how do you know what certain markets are after?
A lot of it has been historical, obviously, in terms of, and its culture changes, and we obviously visit the market quite often. We do promotions within markets. We have food fairs which we attend around the world, which customers come to visit us, and obviously it's market intelligence that you pick up over years of experience in the industry.
Is the export industry continuing to advance?
Yes, I think there's been a lot of advancement over the last few years in terms of, as New Zealand is shipping more chilled product, and the market's demanding tastier, tender product, is that there's been a lot of packaging enhancements. There's been ways to look at electrical stunning when the animals are slaughtered, and also temperature profiles all through the plant, and that temperature profile takes you right to the market. So there's certainly been a lot of advancements. There will continue to be, because the market demands a longer shelf life. When the product gets into the market, the retailers are demanding that they want to be able to have the opportunity to sell a product for longer periods of time and also get the same eating experience. So that advancement of technology will continue, but it's all about trying to keep the animal less stress-free at times through slaughter process, and through, after that, getting your process right through your boning rooms to your load-out areas and onto the vessels.
Now that we've met our businesses, what advice can they give us to avoid pitfalls when dealing with export?
Okay, you've got to make sure that you're exporting for the right reasons. You're not exporting because you're short of cash flow, you've got too much product and you need to get rid of it in a hurry. So then you're actually selling it at a cheaper rate. The second thing is to ensure that you've got your documentation completed correctly. And that's using the customs people and the people that know what they're doing. Especially if you're a small company like mine, you don't have the knowledge within your team. So you need to go outside to get that expertise. It wouldn't be a good look to have a container of chocolate sitting, say, somewhere in Japan, and they won't release it because your documentation is wrong. And so then you're getting wharf charges, you're getting customs charges, then they decide to return the containers to New Zealand, so you've got extra freight charges, and to top it all off, they're not going to pay you for the goods because they weren't acceptable. And then from there you have to go and repair the damage with your client and try to continue to work with the client and save the situation.
I think some of the pitfalls is you've got to be careful when you're dealing in new markets or with new customers that you understand the people you're dealing with, and for you yourself to make sure you've got good product knowledge, you know the product you're selling, you know the people that you're dealing with, and actually it also is financial secure in terms of your company's going to receive and be paid for the money on time and within the sales terms. So it's important really to know your market and know the people you're dealing with.
And what's the biggest lesson so far that they've learned in business?
Probably the most valuable lesson is 3 years ago we tried to go offshore, and we tried to go offshore for the wrong reasons, and that was because we needed to grow our market and we actually hadn't stabilised or consolidated the market within New Zealand and even consolidated the structure within our own company. So at the last minute we pulled out of Australia, but it cost us a lot of money. It probably cost us $40,000 at that stage. With marketing and development of product, etc. This time going back into export market, we've gone for a niche market and we're working directly with the people, so we're making sure that we're giving them a product that they want, that they can sell, and at the same time we're promoting New Zealand, and we've got the structures underneath within our business to cope with the growth. Because you've got things like huge outlay in marketing, in packaging, samples, and often for the first lot of work you're not paid for a few weeks from when you actually start making the product. And if you're a small business and you suddenly get a client that wants, say, a full container of chocolate and you've only been making pallet loads, you've got a lot of expansion, so you need to be working with your finance people, with your bank, because again it can attack your cash flow. One thing we've also learned is not to forget your customers at home. And that's probably something we did the first time around because we hadn't consolidated the customers within New Zealand because they're your bread and butter. And for a niche company like ourselves, we need to remember that within New Zealand it is New Zealanders, not only myself, that market my product.
I think when you're dealing with people overseas, is it's important that you make sure every part of the sale that you make is ticked off, all the T's are crossed and I's dotted in terms of your sales, your sales information, the payment terms, sales terms and pricing. So it's very important that you always make that clear, and the communication is a critical component of when you're making sales overseas customers worldwide.
Thank you for joining us for the Southern Institute of Technology's academic program, the Certificate in Small Business Management. That was the final in the series, but if you'd like more information about the course, you can contact the team at SIT on 0800 SIT to Learn. See you next time.